Hi guys, welcome to my YouTube channel. Here I am back with another informative video. So the topic of discussion is top tax write-offs you are missing in 2025. So here we will discuss 34 big tax deductions, you can say write-offs for business in 2025. As a business owner, the easiest way to reduce your taxes is through small business deductions. Yet 90% of business owners overpay their taxes because they fail to write off expenses they already pay for. Why? Because many small business owners and sadly accountants too are not fully aware of the various deductions available. In fact, most do not even know what deductions are and the role it plays in reducing your taxes. So learning how to lower your taxable income through legal deductions and smart plannings is essential to keeping more of what you earn. So in this article we guide you through everything you need to know about business tax write-offs and the top 30 tax deductions for the small business owners. So what is a small business tax deduction? Also you also know as a tax write-off. The tax law defines a tax deduction as any ordinary and the necessary expense incurred to carry on any trade or business. Eligible expenses are deducted from the business income reported on your tax return, resulting in lower tax liability. The tax law does not define what is meant by an ordinary and necessary expense, leaving the door open for the interpretation. The IRS provides some clarity in various publications, but the definition remains wide ranging. As a result, the broad definition of small business tax deductions make it possible for businesses to deduct almost any expense as long as it meets the criteria. Yet, the vast majority of the entrepreneurs are not maximizing their deductions, resulting in millions in overpaid taxes. To help you avoid missed reductions, start up with top 30 business write-offs below. So talking about first, home office deduction. The home office deductions allow you to deduct a portion of your home expenses as a business expense. If you do any work from home for your business, you may qualify for this deduction. The amount of your deduction is based on the percentage of space in your home that is used exclusively for your business. If you qualify, you can deduct a portion of the following home expenses that include mortgage, interest, property taxes, home insurance, utilities, Wi-Fi repairs, depreciation, HOA fees. To illustrate, let's look very simple example. Let's assume your annual home expense will be $100,000 this year. So if you use 20% of your home exclusively for business, you can write off $20,000 of your home expenses. It's that simple. Yet 90% of small business owners miss this deduction because they are unaware of it, or they are afraid or to use it in fear of the IRS. However, this deduction is completely valid per the tax code. So in fact, the IRS provides the necessary guidance on when and how you can take the deductions. If you need assistance, you may want to consider consulting tax professional to determine if you qualify. So the second write-off is self-employment tax deduction and avoidance. So self-employment tax is a 15.3% tax that is used to fund social security and Medicare programs. Sole proprietorship, partnership, and the limited liability companies are subject to this tax by default. Self-employment tax is twice as much as employees who pay social security and Medicare tax through their employers. This is because both employees and the employers pay in these programs. So when you are self-employed, you have to pay both sides of this tax. As an employee, you only pay 7.65% of your wages in social security and Medicare tax. Then your employer is required to pay another 7.65 on the wages they pay you. Because of this, self-employment tax can be burdensome. However, you can reduce your self-employment taxes in two ways. The first is the amount you pay in self-employment tax is deductible at the tax time. For high earners, This can equal thousands in tax savings every year. If you pay this tax, you would do yourself a disservice to not deduct it. Then choose a business structure that avoids self-employment tax altogether. C corporation and S corporation do not pay this tax at all, but they are subject to the other tax rules. Changing your business structure will come with more requirements like payrolls and separate tax forms. Still, understanding how business entity choices impact self-employment tax breaks can help you make smarter long-term decisions and maximize your after tax income. So the third is depreciation deductions, section 179. If you buy any tangible assets for your business, you may be able to deduct a large portion of the cost in the year you made the purchase. Typically, the cost of purchased assets are spread over several years due to IRS depreciation rules. However, Section 179 allows you to supersize deductions on asset purchases. This tax code provision lets you to deduct up to 100% of the cost of tangible assets. But what are the tangible assets? Tangible assets are the assets that are physically touched. Example of tangible assets is include equipments, machinery, furniture, vehicle, or other type of the property. And if you buy tangible assets for your business, you write off a sizable portion of the cost. Let's illustrate this concept with a very simple example. Let's say you buy $100,000 of new equipment with a 5-year lifespan. Typically, you could deduct $20,000 each year over 5 years, because normally you are only able to deduct a percentage annually based on the assets useful lifespan. But the section 179, you could have deducted the entire $100,000 up front in 1 year. It's that simple. This one tax provision just increase your tax deduction from $20,000 to $100,000. So the fourth point is 20% pass through deduction, QBI. The pass-through deductions allows eligible small business owners to deduct up to 20% of their net business income. For example, let's say your business nets is $100,000 in income. If you take the 20% QBI deductions, your taxable income would decrease to the $80,000. At the 25% tax rate, you would just have saved $5,000 in taxes from this one deduction. So here the question is how to qualify. In order to qualify for pass-through deductions, you must be a qualified trade or a business. The IRS exclude specified services from the deduction, which they define as a business that rely on the reputation of the owner. This would exclude many health, finance, law, and accounting professionals from qualifying. But when reading the fine print, many service businesses still fit within expectation to claim the QBI. So the fifth is vehicle tax deduction. If you use a vehicle for your business, then you can you can use the vehicle tax deduction to reduce your taxes. The IRS give you two options to claim vehicle deductions. The first one is business mileage. You can deduct each business mile you drove with the IRS standard mileage rate. Then the second is actual vehicle expenses. You can deduct a percentage of specific cost like gas, repairs, insurance, lease payments, maintenance, registration fees. Vehicle over 6,000 pounds may also qualify for bonus depreciation, which may allow you to deduct a larger portion of the vehicle's cost. The sixth is travel expense deductions. When you travel for business purposes, direct business expenses are fully tax deductible. This include flights, hotels, meals, and transportations. Every deductible expense must relate specifically to the business purpose of the trip. Then comes the business seventh point is business meals deduction. Having lunch with a business contract over dinner, if so, you can deduct a significant portion of these meal cost under your business. The key is ensuring the meals involve at least one business contact and the business discussion and topics. Then the eighth is hiring your children's. Then you can lower your write-offs by employee salaries and contact labor. Then comes the point of employee benefit programs. The 11th is 401k contributions, then the retirement pension contributions, health saving accounts, health insurance premiums, and the business insurance deduction. So that was all about the topic. Hope this will have been beneficial for you. So do subscribe the channel for more informational videos. Thank you.